This morning, you made a choice. Maybe it was Coca-Cola over Pepsi, maybe Nike over Adidas. Maybe you opened Netflix instead of going to the cinema. Maybe you paid with a Visa card and not Mastercard. Small decisions, everyday decisions, the kind you make without thinking twice. But here's what nobody told you. Behind almost every one of those choices sits the same company, the same owner, watching, profiting, quietly. Their name is BlackRock. And by the end of this video, you'll never look at your wallet the same way again. Let's start with a number, $14 trillion. That is how much money BlackRock manages as of the end of 2025. Only 2 countries on Earth have a GDP larger than that: the United States and China. Every other nation on the planet, Germany, Japan, France, the United Kingdom, all of them smaller than one private company based in Midtown Manhattan. BlackRock was founded in 1988 by 8 people in a single room with $0 under management. One of those 8 people was a man named Larry Fink. And what Fink understood, before almost anyone else on Wall Street, was something deceptively simple. You don't need to own a company to control it. You just need to own enough of it. And if you own enough of everything, you control everything. Here's how they did it. BlackRock built something called an index fund. The idea is straightforward. Instead of betting on one company, you buy a small piece of every major company in the market, automatically, all at once. Your pension fund gives BlackRock money. BlackRock spreads it across thousands of stocks. You get returns. BlackRock gets a management fee. And with every dollar they take in, their ownership stake in every major corporation on Earth grows just a little bit larger, quietly, systematically, without anyone voting for it. Today, BlackRock holds stakes in 5,530 companies. Let that number sink in. 5,530 companies. That's not a portfolio. That's a map of the global economy. They own 6.91% of Apple, 6.91% of Microsoft, Apple's direct competitor. Think about that. They own 7.37% of Coca-Cola and 8.1% of PepsiCo at the same time. American Airlines, Delta, and United. BlackRock is a top shareholder in all 3. Walmart and Amazon, both BlackRock. Netflix and Disney, BlackRock. JP Morgan Chase and Bank of America, BlackRock. Exxon and Chevron, BlackRock. You go to the pharmacy, CVS, Walgreens, both BlackRock. You buy groceries, the food brands, the supermarkets, the distributors. BlackRock is somewhere in that chain. And here is the question that economists have started asking very loudly. When you own 7% of Coca-Cola and 8% of Pepsi at the same time, do you actually want them to compete? Competition means one wins and one loses. But if you own both, you just want both of them to be profitable. In 2023, the Department of Justice opened an investigation into whether this kind of common ownership is quietly raising the prices of airline tickets, groceries, and bank fees across America. Not through conspiracy, not through backroom deals, just through the math of who owns what. But the investment business is only half the story, because BlackRock also built something most people have never heard of. It's called Aladdin, a software system that analyzes financial risk for institutions around the world. And here is the part that should make you pause. Aladdin doesn't just manage BlackRock's $14 trillion. It manages risk for other asset managers too: insurance companies, pension funds, central banks. In total, Aladdin oversees an estimated $20 trillion in assets that belong to other organizations, which means BlackRock doesn't just control what it owns, it also sees inside the portfolios of its competitors. It knows what they're holding, what they're afraid of, what they're planning to sell. In 2020, when COVID hit and financial markets started collapsing, the U.S. Federal Reserve needed to act fast. They needed someone to manage an emergency bond buying program. They didn't call a bank. They didn't build an internal team. They called BlackRock. One private company, unelected and unaccountable, was handed the keys to part of the U.S. government's emergency financial response. No public vote, no congressional approval, just a phone call to Larry Fink. Speaking of Larry Fink, in 2025, he earned $37.7 million in total compensation. His personal net worth sits at around $1.3 billion. But those numbers are almost beside the point, because what Fink actually has is access. Presidents call him, Prime ministers call him. The heads of central banks call him. When the most powerful governments in the world need to understand what's happening in financial markets, they ask the man who can see all of it at once. So what does this mean for you? It means that the ordinary person is unknowingly funneling money upward, saving for retirement, buying groceries, booking a flight, streaming a show. All of it flows through thousands of companies into the same pool, a pool managed by one firm with 24,900 employees in more than 30 countries, controlling more wealth than any institution in human history. None of this is a conspiracy theory. It's all in BlackRock's public filings, available to anyone who looks. The question isn't whether this is happening. The question is, what does it mean that one company can grow this large and almost nobody knows their name? You'll still drink the Coke. You'll still book the flight. You'll still stream the show tonight. But somewhere between your wallet and that decision, BlackRock is there, quietly, profitably, in everything. If you want to know what else is hiding in your monthly bill, you know what to do.